Hello, everybody. So, institutions finally came to grips with what we've been talking about for a little while, the implications of growing inflation, not less of it, and accepting that they weren't going to get their six, probably not three rate cuts. Maybe they'll get one. We'll see how that goes. But we look at the charts for our information, and the charts were telling us that all these rate cuts that they were anticipating, like with the next month or so, wasn't likely to happen. So 13-week was flipping back and forth. It led us to think, back here was, why is it going up? No one's expecting an increase in interest rates, the Fed funds rate, but why was it going up? So it was really unknown based on what was happening at that time, and then it flipped back down. I was like, okay, it was at support, and it flipped back up again. And, this is basically happening on economic news that is coming out or what's going on in the world. So then it came back down again, and so I was like, all right, is it going to drop? We're looking at all of these other charts, gasoline going up and crude oil going up and energy stocks and ag ETF was rising and other commodities and metals, and it's like, this just doesn't make any sense. And so as the Fed starts coming out and telling the truth that, look, they're very okay to stand pat and see what happens. And the 13-week flips back up again, and right now it's stalled. So what does this essentially mean? Well, clearly it's in a trading range, and the uncertainty here now. So you see I have an alert up here. What we want to see, does this potentially start moving up? Because if it does, based on more economic reports or whatever the beliefs may be, that would suggest that there is a increasing belief that the Fed might have to raise. This is not clear yet, but we keep an eye on these trends and support and resistance to see what actually happens. You can see the 13-week has been grinding up. There's no sign of any give back yet. It is stalled. It's just a line chart of the daily. It certainly could go higher, and you want to keep an eye on that and set an alert. You could use TBT, which is the ETF, which is like the 20-year mix of different expirations. So you'll see if that pops up. This is the 30-year. You can see the same story. It's been grinding up there. So this resistance that is over here, will it stall? It has stalled. We'll see whether that keeps going. Of course, just set an alert. The S&Ps are coming down to some support. You can see it here. These pivot lows. It's unknown whether it's going to stop there. It's just a reference point. We look to the left to see, hey, let's see what happens when it gets there. It could have an intraday bounce. It could stabilize from the daily chart. We would look to see, does it form a green bar? Does it form a bottoming tail bar? Our bar-by-bar analysis will guide us as to the increase in demand at this level or the lack thereof. Our market internals are beginning to move in the right direction together. So the last few weeks, I've been looking at this and saying, why is this sentiment gauge moving up, which is the total put-call ratio? And at that time, I was like, are these institutions in denial about what's going on, and they're buying calls, and as it's moving higher? And so let's look at this one here. Well, we're talking about sentiment. And so over those weeks here, I was saying, and you can see the S&P was kind of going sideways there. And I was pointing out, hey, this is the end of these weeks, and there's these big spikes up in bearish bets, put buying. So it was kind of, okay, what is the trend going to do? Is it going to break out? Is it going to break down? And if you listen to the old videos, I was saying, well, is this a contrarian indicator as far as this put buying is going to lead to higher prices, and regardless of, the dollar going up and interest rates? Or are these institutions, are they hedging, which if things don't come to fruition as far as the bearish things we were seeing, would help drive the market higher. And now that they're hedging, we see the breakdown has occurred. They were concerned. So in retrospect, it was communicating to us that their concerns and I would say hedging their portfolios. And so now as it's coming down, we're seeing put buying a few days ago at an extreme. And that's what you want to see. And that's what's pulling this moving average lower toward these bands. They're buying those protective puts or bets, or of course profit from it going down. And as this comes down and these internals align, ideally in a support maybe a little bit lower than this, we'll just have to see. All of that coming together will set up at least a high probability bounce against this downtrend now on the daily chart. The equity put-call ratio is already into these lower bands here. They can certainly go lower. Just because they're in an area, that doesn't mean the turn's going to happen. And breadth became extreme. It's the same chart here and here. Became extreme on the way down. Okay, fine. And a lot of times that does lead to a bounce when it gets down here near minus 300 area. It did not. There were intraday attempts that failed. There were some pretty impressive intraday rallies. You don't see them on the daily chart, of course, but you can see this bar gapped up. This bar rallied deep into that prior red bar. And Friday, was holding, and of course it went back down again. Some decent amount of put buying at the end of the day. So those are good things as far as the option activity is a good thing. That the increase in put buying on the way down toward areas of significant support. So here I've got two lines. You can see it's coming down to these pivot lows here. And then we've got this really large area of congestion. So if it doesn't hold these pivots and enters into this little void area right there, you can see the way that moved up, this little void area, things could accelerate. And so based on economic news, what's happening in the Middle East, and now, the government, they're now funding another $90-something billion to send money over to the Ukraine. More fighting there. The world is crazy. It's dangerous. And so, this could actually accelerate lower down into this area. So regardless of all of that, if it should do that, it hits support. Our internal market gauges reach extremes. We're going to be anticipating some type of a turn. We'll just see how that all plays out. We're not there yet. Okay. Look around the markets. You see the Dow showed some relative strength at the end of the week there. And you can see healthcare plans over here. UNH, which is the highest priced stock in the Dow, was moving up on earnings report. So there were, some things going up, like American Express on Friday, UNH during the week. On the other hand, technology, you can see down here, was down 6.5%. So the institutional favorites, even NVIDIA, other semiconductors were all falling, which we'll take a look at. The transports broke down through support. You can see they've entered this void on the weekly chart. This low right there, I'll just drag this down here. This low right there should be a pivot on the weekly time frame, and there you can see where it is, and there's an unfilled gap. So the transport's moving down, obviously bearish. Other markets moving down. They're moving down together. So transports, what are the transports? Stocks that move information, goods, and services. So as this is breaking down, besides just, hey, people just saying, I just want out of this market right now, we're not going to get any rate cuts, it also has implications for the recession word, which the majority do not believe that's going to happen. We don't know if it's going to happen. But as transportation stocks begin to decline like this, as technical chart readers, that is one of the implications of that. And so if inflation is increasing, cost of goods going up, consumers begin to retract from spending money, less demand, overhead supply, the possibility of a recession increases in probability. And we'll see if the transports hold here or not, or what's going to happen. The Russell was moving higher. You can see the weekly here. The monthly even broke out of this consolidation. But now, and we still got a whole, almost 10 days or whatever to go in the monthly chart, but we got a big bearish, I should say, wide range bar down. Prices are in an area of support. So as different markets come down to support, we look for at least stabilization. And you can see there on the daily time frame, the 200 MA is there, $190. It held a bit on Friday. One green bar certainly doesn't change the trend, but in this area is where we would anticipate, somewhere in here, this would begin to stabilize. So we look for alignment of different markets and stabilization. Here's your S&P, closed below 5,000. There's a bigger area of support, and you look, you can see this cluster of bars on the weekly chart where it's stalled at right now, and then this larger cluster of weekly bars and more significant support area down there around 4,800. Oil, as you can see now, year to date is the best performing ETF, almost 20% inflation, obviously. It's backed off a little last week. If things start flying in the Middle East again, clearly this is going to move back up again. It's in a strong trend. We'll see what this does. NASDAQ 100, technology just being sold aggressively, and support is somewhere in this area, right? Somewhere in here. So as prices start to fall in a vertical way, it tells us that any bullish sentiment is over. It's like get out at any cost. And so if this fall continues to fall early in the week, vertically down into the 200 MA in this support area, this would create a void up above. Things reach an extreme, and we start looking for bottoming patterns, call spreads, which showed relative strength. So within that sector, we can then go in and start looking for different stocks. So Walgreens has just been getting killed for the longest time. It showed a little relative strength on Friday. This is just sorted by percent change on the day. We sort it by percent change on the week and see what showed strong. We find that defensive stocks did well. Ketchup, that moved up. Certainly looks like it continued to move up. It does have some resistance there. An extreme move, climactic buy. Lulu athletic store bouncing. So just a technical bounce. We could look to the left there. You can see it on the weekly chart in the support area. See why we always say look to the left. It's the one consistency as far as finding support and resistance. You don't need trend lines, fib lines, anything. Just look to the left. It's simple. Dr. Pepper moving up, again, defensive. You got to drink something. Pepsi, moving up. Value stocks, Starbucks, technical bounce. Look to the left, off of support there. Been going down, an indication. I don't know about, I guess coffee prices might be going up. They typically hedged in historically, that really hasn't been such a big deal. I've seen Starbucks go up when coffee prices were going up, but it reaches a technical support. And it could be another piece of information saying, hey, the consumer is getting tight enough to where they won't pay $4 for a cup of coffee. But it reached this support, and it had a bounce. You can see what was weaker. Tesla which is obviously in the NASDAQ 100, but it's also part of consumer discretionary, and that's now beginning to fall almost vertically. You can see the drop last week. There's no support here. I heard somebody come out and said no, they were lowering their target down here to around 124 or so. We'll see what happens. There's nothing to the left, so maybe it keeps dropping, but we don't know. One thing I'll mention for those of you that are new, have not taken the MTS course or the swing trading course. These dots, they're called pivots. They're nothing more than a mark on the chart that says there's 3 higher lows to the left and right. So while we look to the left and we recognize tradable voids, which this is on Tesla, and you could say, well, this should go down to $100. That's where that next pivot is, give or take, and there's nothing to stop it. Well, yeah, but support can be created. How is it created? Well, it starts with 3 higher low bars, and to the left and right, and it forms a pivot, like here. That formed a pivot. And at that point, you can see on the weekly chart, it was at that pivot low from 2003. So once that forms, and you see that some stabilization, we always have a belief, a view, that as prices reach a prior pivot, demand will increase again. We don't know how much. So you had this pivot form in the same area of that one you can see on the weekly chart over here, right, over here. And now when it retested that area, we assume that buyers are going to show up again. Now, can that change the trend? We don't know. If we were to get that setup and there was a void, right, there wasn't this pivot high so close by, we might think, hey, and if there was, this gap up was bullish, that it gapped up above a red bar, retesting this, that it could go higher. So it did go higher, but then it couldn't get through this area, and subsequently last week was very bearish, and prices fell back down again. But I'm reinforcing the idea of looking to the left, multiple time frames, the trend, of course, and maybe the same thing happens as this begins to fall. Maybe it does not reach 100, and it forms a pivot. Let's just call it 120, and we get a retest pattern and bottoming tail bars and so on, and that would be a point for us to consider put spreads. Depending on how it formed, we might think directionally, but a little lesson there as to combining multiple time frames, some support and resistance, and these pivots, and how to put that all together. NVIDIA, institutional favorite, clearly was holding on. Institutions said, the hell with this. The Fed ain't coming to the rescue. It's time to take some money off the table. And it's falling into this void. There's a pivot down here. The weekly is still in an uptrend. The monthly is in an uptrend. And as it comes down here, our assumption is that institutions in this area are going to be willing to step up. So we just monitor that. And when it gets down there, what does it do? Another semiconductor falling vertically. 50 MA there is the 50 MA in alignment with some support. There's some minor support, but there's an unfilled gap. So maybe it comes down to 100 before it begins to stabilize, give or take. Maybe it gets under 100. We don't know. We just know this is an area of interest. So you can, just set an alert. No big deal. You don't have to watch it. Marvell, another semiconductor. You remember here, we did a put spread. We thought some longs, this could keep going. It wound up falling apart like many other things did. Now it's at the 200. There's nothing lined up with the 200. So maybe this has to come down here. Netflix reported earnings last week. That gap down, clearly in trouble. It stalled at the pivot to the left. It's got a big void below. When they gap down on earnings like that, they often stabilize a bit and they go lower. When they gap up on earnings, they typically stabilize a bit and go higher. So while this could bounce a little bit or stabilize, historically, this will go lower. And lots of semiconductors falling. AMD, that started to, excuse me, lose its momentum. Remember all the stories here. Oh, now there's a competitor for these AI chips, and AMD is going to be, competition for NVIDIA. And then it just fell apart. What happened? I can't tell you news-wise, but clearly it fell apart, and then you got this wide range bar down, and it couldn't bounce. And last week, weak market, whatever hopes there were of a bounce begins to fade, and down it goes. So the 200 MA is alignment with that pivot, and I'm going to set an alert down there at the 200 MA, because when it gets down there, hopefully it falls straight down. Will begin to it'll stabilize. So there could be intraday bounces, day trading opportunities. Say the hourly and 5-minute begin to go sideways and it bounces back up. And we'll see how far that goes. All right. Looking at other markets, you can see the NASDAQ composite falling sharply. What's strong? Just easily just sort it by weekly percent change. Sort it the other way. You'll find what's green. And so biotech stocks. I didn't want to know. I don't know why that's in there anyway. It's a leveraged ETF. I don't know why that's in there. I guess it's supposed to be, but you can see showing some strength, stocks that were bouncing up a bit. So this is energy-related shipping and ports. That looks like it can go higher. Look at a higher time frame. Does it have room? Yeah, it does. So a little messy, but it looks like it can go higher. What did well last week? And the S&Ps, S&P ETFs, sorted by weekly percent change, utilities. Sometimes institutions go over there, even when interest rates are going up, and this typically goes down. They go buy utilities because the yield, theoretically, is going to hold the prices of those stocks from dropping. So I assume that was the idea, and that bounced up pretty sharply last week. Defensive consumer staples bouncing up. We looked at ketchup. General Mills, bounced up. Institutions just going to, food. You got to eat something. Right? Tobacco. I guess if you're nervous, you smoke cigarettes. Whatever else Philip Morris does. Again, food. Personal products. Wide range. That looks great. Wide range bar up. A little consolidation. It's popping up near that resistance there, but it looks like all-time highs. So that is definitely one to keep an eye on. That could go higher. Schmucker's technical bounce. Look to the left. Right? And now I said it probably a million times, but you should be getting it. Financials bouncing off of this support, but damaged. It's broken down. And these regional banks reported earnings on Friday, and they bounced. Here, KBE. That is some banks, and we can see some are going to be reporting. That's one that probably reported on Friday. Well, that's reporting this week, but it must have popped up with those that did report. So a lot of these regional banks popped big time on Friday, which is a positive, of course. But most of them look like this, where they're trending down and they're just bouncing back up again. So not like they're in uptrends and breaking out of consolidations. Healthcare breaking down. On the other hand, healthcare plans was the best performing sector, and that was UNH. Big move up from a pretty sharp sell-off, and shorts probably got caught. And again, you can look through these. This is bottoming. It's in a downtrend. We'll see if it bounces up. Now, that's a better pattern. And I know we were talking about this in the green room, this bottoming pattern here, and it just wiggled around last week. It's at that line. So, if it can clear this, it should continue to move up. Again, this one clearly stronger, but coming up to resistance, but gapped up. Again, must have reported earnings because now it's due on 7/17. So gap up on earnings, consolidation. Put that one on your watch list to go higher. Energy, pulled back. It's on minor support. I talked about this over the last several weeks about a trading range within a bigger trading range and entering this void. It got to the top. Now it's pulling back. And industrials pulling back. And airlines popped up. UAL reported its earnings, and that had a big bounce. That kind of flies in the face of consumers willing to spend money, right, on vacations. However, I can find it here. I showed it to you last week. Here you go, right here. We see hotels, airlines, and cruise lines breaking down. So some airlines moving up, not all of them, but here, ALK, that moved up. American Airlines bounced. That's been going down. LUV, bounce up. JetBlue showing some relative strength. That was in a downtrend for the longest time. Here's another airline. And here's the cruise lines. So there's consumers backing away from the cruise lines as far as spending money there. Southwest doing well, and not bad. Not held up better than Norwegian, but on support. So you get the idea. There's Delta holding up well, Carnival, breaking down. And if you look around, you can see, consumers type of thing, Wynn Resorts, casinos, that broke down last week. So across the board, there was, pretty much a lot of selling. We anticipated this. It was frustrating, waiting for it to happen, what we believed was going to happen, what had to happen, belief had to happen. And eventually, here it is happening. So as these different sectors begin to move down to their support areas and internals line up, historically we know that buyers will show up again. And so now we just have to wait for prices to reach those levels, internals to line up, and of course get the price confirmation that bottoming tail bars, gap downs that are bought and reverses back up again. So one of my pre-market commentaries in the middle of last week was we're getting closer to a buyable low point, but it's going to take several weeks before that to play out. So knowing that we hadn't reached support, internals weren't quite there yet, and knowing once we get there, it's going to take some backing and filling, trading back and forth to build up a little new support area to launch a counter trend move. Now, counter trend on the daily, however, with the trend on the weekly and monthly, since this is backing off from new all-time highs. So wherever it needs to happen, we don't know, here, wherever, as this pulls back into the support area and we get confirming price patterns, we're going to look for those buy setups as we always do. Technology we looked at. So yeah, that's the story. Just looking at marijuana, it held up relatively well last week. Earlier in the year, we talked about this bottoming, and you can see it on the monthly. So can it actually get turned around? We shall see. And just quickly take a peek at what did terribly last week. Again, semiconductor equipment. This typically happens as interest rates go up. We'll have to keep an eye on those interest rates, of course. Solar, we thought was going to bottom out here. It did bottom out, but it failed. Technology, computer systems, auto manufacturers. Of course, that's Tesla, and you can go look. Ferraris. Ferrari looks like it's ready to crack now. Those that can afford Ferraris aren't affected as much by recession. So if they want what they want, when they want it, they're going to get it. And but now you got a topping pattern. So maybe all of this inflation is even filtering to those that have the funds to buy, but they're getting concerned. Well, look, maybe the Fed not in a position now to raise interest rates. Whoever's invested in the broader markets and have a way it is, and the markets are falling sharply, are going to back off. Right? The more you have in the markets, the bigger, the more you lose. What is the percentage of your portfolio that's in there? And it's just how much you're losing. And trucking, transport's breaking down and so on. There's hotels, versus a mixed ETF, airlines and so on, direct, right? ETF, hotels breaking down sharply. So resorts, you see where this is going. So this drop is not over yet, but stick with us and we'll update accordingly. And if you have any questions, email us, Greg at Master Trader and Dan at Master Trader.